Do you have a chunk of cash sitting around for a specific goal, maybe a down payment next year, or a big vacation in 6 months, and you're wondering how to get the most interest out of it without locking it up for too long? If so, we need to talk about Ally Bank's short-term CD options. I've used Ally for years, and while their high-yield savings account is great for flexibility, when you know you won't touch that money for a set period, a certificate of deposit, or CD, is often the better move for a higher, guaranteed rate. For short-term savers, which I consider to be anything under 18 months, Ally offers two main types you should seriously look at: the high-yield CD and the no-penalty CD. 1. The high-yield CD. Maximize your APY. The standard high-yield CD is Ally's bread and butter, and it's where you'll find their most competitive short-term APYs. The best terms. For short-term savers, you'll be looking at terms like the 3, 6, 9, 12, or 18-month options. Historically, Ally's 6-month, 9-month, and 12-month terms have often offered the highest annual percentage yields, or APYs, especially in a high-interest rate environment. You need to check the current rates, but these mid-range short terms often beat both the 3-month and the longer options. Key advantage: the rate is fixed for the entire term. This is perfect if you believe current interest rates are as high as they're going to get and you want to lock in that high yield for your savings goal. The catch: early withdrawal penalty. This is the crucial part. The high-yield CD is meant to be a commitment. If you need to withdraw the principal before the maturity date, say, you open a 9-month CD and need the money in month 5, you will pay a penalty. For terms between 3 and 24 months, Ally's penalty is typically 60 days of interest. You need to be 100% sure you won't need the cash. 2. The no-penalty CD. Maximum flexibility. For short-term savings where there's even a slight chance you might need the money before the set date, Ally's no-penalty CD is the safer, more flexible choice. The term: this CD currently only comes in an 11-month term. Key advantage: this is a huge benefit. You can withdraw the entire balance, including the interest earned, without any penalty anytime after the first 6 days of funding the account. I actually used this option for a wedding savings fund because I wasn't entirely sure when I'd need the final cash. It gave me the guaranteed CD rate with the flexibility of a high-yield savings account. The trade-off: the interest rate on the no-penalty CD is usually slightly lower than the highest high-yield CD offers. It's a small price to pay for the peace of mind that comes with penalty-free access. My personal strategy: the short-term decision. How do you choose between the two? It comes down to two simple questions: certainty and time. If your timeline is rock solid, you know you need the money in exactly 6 or 9 months, and there's virtually no scenario where you'd need it earlier. Go for the high-yield CD with the best APY. You lock in the highest possible return. If your timeline is maybe or you might need the cash, you are saving for a house down payment in about a year, but the perfect listing could pop up in month 7. Go for the 11-month no-penalty CD. You'll earn a fixed, competitive rate, and you keep the escape hatch open. Final quick reminders. No minimum deposit. Ally CDs are great because they have no minimum opening deposit, which makes them accessible for everyone. Compounding. Interest is compounded daily, which means your money is earning interest on interest every single day, maximizing your short-term growth. 10-day best rate guarantee. If you fund your CD within the first 10 days of opening, Ally guarantees you'll get the highest rate they offer for that term during that 10-day period. For any short-term savings goal, I always recommend comparing the top high-yield CD rate to the no-penalty CD rate and their standard high-yield savings account rate. Usually, for a true 6 to 18-month timeline, one of these CDs will be your best friend. With that said, thanks for watching and until next time.